Hey, welcome everyone. This is the Q&A for March 16th, 2022. This is a Q&A for Options Moneymaker and New Cycle Trading Analytics. So we're going to just cover a couple of things here, and then we're going to jump right into the Q&A. So if you have questions, any thoughts that you'd like to share, anything that we could help you understand more of, please go ahead and put your question in the comments box so that we can jump to those right away. I just want to cover a couple of things here in general. We're trading the Aurora trading system, and it's pretty apparent, those of you who are in the live trading room, that recent events around the world have added a significant amount of volatility to the market. And my counsel to you is just trade the system. We have successfully navigated through all the different levels of volatility in the last nearly 2 years of testing and validating the system. And the more recent heightened levels of volatility in the market have not changed that. So yes, we have days that are a bit more challenging, and I actually feel like work than some other days. We've had days that are just free flowing. It seems like every trade is easy, and we're accumulating much higher profits trading the NASDAQ 100. We have days like today that just felt like it was slogging through a very, very tight range, and it was difficult to get some momentum. That is the reality of trading, and the system, the Aurora trading system, was designed to help navigate through that. So the system is comprised of the signals it presents, the parameters that we've identified through our testing, which are the stop and profit parameters, and also the identification of higher risk trades, taking a look at the moving averages where we are trading relative to those, as well as the Bollinger Bands. So if you really have a serious desire, a passion for being successful, then I would say turn the news off, follow the system. Other than pre-planned news events, which we always identify in the live trading room, I think that the news will actually interfere with your psychology of trading. We want you to focus on achieving your personal profit goal. That is the most important thing, whatever it is, whether it's 120 points on NASDAQ, or whether it's 30 points on NASDAQ, whether it's a $500 a day goal or $2,000 a day goal, no matter where it comes from, whether you're trading options, whether you're trading futures, whether you're trading different markets within futures. It doesn't matter how you get there. Just follow the system. But diversification is an important aspect of trading the system. We have a fair number of people who are exclusively focused on NASDAQ, and that's okay because most of those folks are fairly early on in their learning and understanding of the signals. But NASDAQ is not all, should not be all of your trading. And if it is, then you take the highs with the lows. That's okay. That really is okay, whatever you decide to do with your own personal trading. But we consider NASDAQ to be an outstanding learning tool, a way for us to help you understand how to recognize the signals, how to trade the signals, each of the signals, how they align, when to open them, when they're not valid, when they're high risk. But consider diversification. Today is a great example. There were some outstanding options trades today. We alerted one, our service actually alerted one on Netflix. And then there were multiple other opportunities on options. I know I was able to take some really nice options plays today. In terms of futures, like I mentioned, we focus on the NASDAQ 100 for both trading and training. And it's an excellent futures market to teach from. And it delivers excellent rewards over a long haul. But on a day like today, which happened to be our first losing day since February 9th, it just isn't as much fun. But when you pop over to oil, or maybe you take a look at bonds or corn or wheat or natural gas or anything else that is available to trade, the Aurora trading system will allow you to participate in that market. And not all markets follow each other. So one of the reasons I really like trading the NASDAQ 100 with oil as some level of diversification is because they don't follow each other. Sometimes they do, but when we're in a very tight range bound zone on the NASDAQ, and we are advising our live trading room that we are sitting on the sidelines and we're not participating in this tight range because of what we see in the pattern, oil isn't necessarily participating in that, nor is wheat or corn or bonds or any of the other futures markets that you could trade. So managing diversification when you are ready is an important aspect of being an overall successful trader. I want each and every one of you to achieve whatever goal you have. Some of you might have a 100-point goal or a $2,000 profit goal every day. Some of you might have a $200 profit goal every day. Whatever it is, I'm very confident we can help you get there if you'll just follow a little guidance that we provide in addition to the tools and systems that we make available to you. This is just a idea of what the current performance of the NASDAQ 100 futures is. Trading from 7 to 2, we're averaging $2,414 per day. That's looking back to October 1st through today. Trading 8 to 2, and the reason I draw a line between 7 and 8 is because 8 o'clock is when we open the live trading room, and many of you are looking for us to guide you in calling out the trades. So the average from 8 to 2 is $2,062 per day. Now, those are really strong numbers. More recently, the numbers have been on the low side of that average, but they are still positive overall. So that's really what I want you to focus on, and I want you to be involved in this so that you win. The personal trading plan that I track based on NASDAQ trading and based on using PATs to decide when to stop trading during the day. And PATs will sometimes take me out for the day at a less favorable overall result than trading until 2. And sometimes PATs takes me out for the day with a more favorable outcome than trading until 2 o'clock. But I use PATs. PATs is, if you don't understand PATs, it's in session 5 of the Aurora Trading Education Program. There's 5 modules. And in session 5, which is available to all Aurora System subscribers, we explain what PATS is and the philosophy, strategy behind it. But the personal trading plan, we started with $5,000. We are trading NASDAQ every day. And as you know, in the live trading room, we sit out some parts of the day. We explain why. And the other parts of the day, we're just taking every single trade. But we've gone through 10 and a half weeks of 2022, and we are up $64,501 in that 10 and a half weeks. That's for the NASDAQ. In addition to that, we now have traders who are trading oil for us, and we have traders who are trading options for us. So there's additional opportunity in oil and options. So to the extent that you want to get more involved in understanding how to drive your personal success or build your personal trading business, this is how you do it. You have a personal trading plan with a goal. You know what your goal is on an everyday basis. Your goal is not dependent on only the NASDAQ 100 futures. It is dependent on you, with our guidance, identifying where to harvest your most opportune profits. Today was a challenge on NQ, and it was actually slightly challenging on oil, more so than we've seen in the last few months. Options were outstanding today. And so if you have the interest and you have the time and you're devoting your time to trading, then start looking around at some of those things. And one of the things that I'm going to be doing over the next few days is I'm going to be identifying more options opportunities for those of you in the live trading room. I'm going to point them out and tell you what the opportunity I believe is, and those of you who are options oriented and familiar with trading options may choose to take advantage of some of that. As with any type of trading, I can't guarantee that any particular trade is going to be successful, but there were some really nice opportunities today on options. So I just want to review this very quickly. I won't get into this too much, but there are stages of learning, and each of you is in a different stage of learning as you're orienting yourself to the Aurora trading system, to trading futures, to trading options, whatever you might be doing. And some of these stages of learning are going to be dependent on your own personal commitment, your actual commitment to the trading, as opposed to just casually participating. So there's unconscious incompetence. You don't really know what you don't know. So you decide you're interested, you don't really understand, but you're going to get involved. And we've made it easy for you to get involved really at no money layout initially, just so that you can kind of get yourself acquainted to it. Then there's a level of conscious incompetence where you really start to be aware of what you don't know. And it's the first level of becoming aware, and it's the first level of learning. Conscious competence is the third level. Now you understand what you should be doing. You actually mentally focus. You may even talk yourself through the right actions. You might be talking to yourself and describing, I need to take this trade. I need to go short. I need to be prepared here. I need to adjust my stop. You might be doing that. This stage, this level of conscious competence is where many of you are right now, given that you started in the early part of January. This stage can be exhausting and it can be frustrating as you build muscle memory, as you build that level of competence and confidence in what you are doing. This is also the decision stage. This is where many of you will just say, I can't do this, and bail out. When the actual story you should be telling yourself is, I need to do this because I'm doing this for me. I'm doing this for whatever goal I have financially. This is a pivot point, if you want to call it that. Some of you will walk away thinking you can't do this. This just doesn't work for you. Some of you may actually want to blame the system as not working. I'm comfortable with that. We have so much data. We know how the system works. But this is where I believe if you really are serious about wanting to achieve something that you can use and have available to you for the rest of your life, that is not dependent on anybody else, it's not dependent on your location, it's only dependent on you having a computer and a internet connection, and it's dependent on you having a commitment to look for the opportunities. This right here is where we, Kristen and I in particular in the live trading room every day, have a strong, passionate desire to help you navigate through that level of conscious competence so that we can move you to level 4, which is unconscious competence. It's second nature. It's natural. The process flows easily. You understand it. You recognize where you should be and where you shouldn't be. You recognize that not every signal is equal. You don't need to take every single signal. And your bottom line is you've got a goal for yourself at the end of 12 months. That's what you're working for. This is exactly what we want to help you accomplish. So I just wanted to remind you about that because this is a very commonly understood stage of learning progression. There's 4 stages, and we want to move you, each of you, into a state of unconscious competence. And more importantly, we want to move you through the conscious competence state where you really know what you should be doing and you're frustrated because you're not always doing it. That's okay. Give yourself some grace. Trade in sim, trade small quantities, whatever it requires for you to get yourself with our help across the finish line into the unconscious competence state. If you're looking for any kind of free training, free education. We offer a lot. You can just go to newcycletrading.com/Aurora or /education. And there is a lot of free training and education we've made available to you. We want to thrive as a business, but more importantly, we want to thrive as a business only because you are thriving in achieving your personal goals. So let's go ahead and address some questions that we have. You may hear Aaron and Kristen here. They may be identifying questions.
David saying, I had to leave my computer for a few moments shortly before 2 p.m. Eastern time today. Could you give your rationale for choosing the 3-minute lower fractal instead of the 5-minute lower fractal for the FOMC announcement?
Absolutely, David. So the 5-minute lower fractal, I actually traded both. I left the 5-minute lower fractal on my chart, on my dome, and I traded the 3-minute lower fractal. The reason is because that 5-minute lower fractal was actually 70 points away from where we are currently trading when I set those fractals up on my dome. And I was just thinking that the likelihood of a big move, and that's really what I was looking for. I was looking for one of those big pushes that might give me 30, 40, or 50 points of profit. The likelihood of moving down 70 points to hit the fractal and then moving another 30 or 50 points beyond that was much smaller than if I used the 3-minute lower fractal. So what ended up happening is we broke the 3-minute lower fractal, ended up taking, actually I took a break even on that because it moved so quickly. I took a break even on that, and then we continued to move lower, and I ended up getting in on the lower 5-minute fractal. But 3-minute fractals and 5-minute fractals are both available for us to trade. We have typically traded 5-minute with the adaptive entry system, and we have typically focused on 5-minute fractals for news-related events as well as market open. But 3-minute fractals is something that Kristen and I dug into extensively. We have quite a bit of history from several months ago on 3-minute fractals, and they can be very lucrative also. So my decision really was based on the fact that the 3-minute fractal was much more realistic in terms of hitting that and accelerating below it so that we could gain a reasonable profit.
Doug is asking if you could go over your current evolving signals on oil.
I can do that. So when you say evolving signals, I'm assuming that you mean the alignment of each of the signals. I want to find a good sequence here. Just, there's a few examples, but I want to get, yeah, okay, so here we go. The very first signal when I'm looking at alignment on a 5-minute oil chart is I'm looking for the PBA to be aligned with a white price bar. That means it's a neutral condition. I will never have a long PBA, the blue PBA, aligned with a short or red price bar. So if that were to happen, meaning that the PBA is blue and the price bar is white, that is entry level number 1. Entry level number 2 in a sequence is when the PBA is still printing and now I have a blue price bar. That's entry level number 2. Entry level number 3 is, if you remember from the adaptive entry system days, I'm looking for the trend bias entry. Trend bias is where you have the T vertical identifier, and it's always going to be the second color bar in a new sequence. So you might have just coming off of a series of white price bars, or you might have reversed, but it's going to be the second of a similar colored price bar. So that's the third one. So it's when the PBA aligns with the T signal, which is the trend bias signal on the price bar. And then the fourth signal is when you have alignment between the 15-minute and the 5-minute. So in this case, let me adjust this here. There we go. So let's see here. We had that the sequence of 3, and then the next alignment. Actually, the next alignment is you can re-enter when the PBA aligns with the price bar color again. So there's another entry, and now you don't have another entry until you have a break in the 5-minute PBA. But in this case, you do have another entry because there you had alignment between the 5-minute and the 15-minute at 8:15. So it's the PBA alignment with a white bar. It's the PBA alignment with the first blue bar in this case, or red bar if we were going short. And then the third one is the PBA alignment with the trend bias signal. And then the fourth signal is 5-minute PBA aligned with 15-minute PBA. And anytime you're in a sequence here where you have a break in the PBA print on the 5-minute, the next time you have a reprint at the open of the bar of the PBA signal on the 5-minute, as long as the price bar color is still aligned, you can take that trade. So in this whole sequence to the upside, you have multiple opportunities to get in. It's either because you have alignment with a 15-minute, or you have alignment with a 5-minute and price bar validation. So here's another one. You still have alignment with a 15-minute, but you had a break in the 5-minute. So here you have another signal to go long based on price bar color. Does that make sense, Doug?
He says, thanks. Steve is saying, I have an account at TD Ameritrade with options approval. Will I need to get futures approval as well?
If you want to trade both futures and options, then you definitely have to have futures approval. And you want to understand at TD Ameritrade what the margin requirement is for trading futures. So I would start, if you've never traded futures, I would start by looking at NASDAQ 100 futures and oil futures. And I would ask TD Ameritrade, what is the day trade margin requirement for oil, which the symbol is CL, Charlie, Larry, and what is the margin requirement for NQ? So the normal margin requirement at Infinity Futures, where we trade on NQ, is $1,000. That doesn't at all pertain to the risk that you have on the trade. It is simply your buying your pass to be able to get into the trade. You have to have $1,000 available in your account. On oil, the margin requirement is $2,000. So you have to have $2,000 of available trading to get into an oil trade. And Steve, I'm just curious, do you have any experience trading futures at all? We've got a couple of our members here who are talking about TD Ameritrade futures trading requirements, and they are not favorable. All right, so I would definitely encourage you to shop around a little bit. If you're comfortable with TD Ameritrade, I've got 2 of our members that are saying that commissions and margins are not good, that Infinity Futures is much better. And it makes a difference if you want to trade multiple contracts. Commissions, might not be as big of a deal, but I first started looking at different brokers and was talking to one particular broker that required $3,500 of margin. to trade one NQ contract. At that time, Infinity was requiring only $500. So I was looking to build an account where I could trade up to 10 contracts. Well, 10 contracts, if the margin is $500, means I need to be willing to have $5,000 in the account to be able to take a 10 contract trade. With the other broker, which I won't name, I would have had to have 35,000 just to take those same 10 contracts. So I would shop around a little bit. Steve, Aaron can send you a link regarding Infinity, and also we can provide you with the contact that we work with. Glenn is very helpful for us. We don't get anything referring. We just are passionate about how much we like the Infinity trading platform and the service that we get. So if that helps you, then good. So your follow-up question is, my goal is to make 500 to 1,000 per day. Is this possible based on using Aurora Trading Alerts system? One of the alerts sent as I'm in the Pacific time. So if you're talking about the options alert service, you could possibly make that amount if you adjust your contract quantity. We published a contract quantity schedule relative to the watch list that we are reviewing. And our goal over the month, an average daily goal for the month, is $300 a day. So if you wanted to trade more contracts, then you could possibly hit that goal. But our goal is to average $300 a day, which is about $6,000 a month.
Alan's requesting that you make a document with the different entry rules on oil, as we've done for the PB 13 and 35 on NQ.
Yeah, Alan, we will do that just as soon as we have finalized all the rules. We've been talking about the entry criteria that I'm using in real time in the live trading room, but it's not finalized yet to where I would want to put it in a set of rules, because I want to still finalize, and we're very close, Alan, but I would want to finalize which of the signals, which of the entries should be viewed as trend trades, much like on NQ we have both catch trades and trend trades. And also then, what are the rules regarding those trend trades? What are the rules, if anything is different than what I've already explained, around the catch trades on oil? So once we have really finalized that, we certainly will publish those rules and let you know. One of the things that's helping us is I've mentioned this in our live trading room, we just actually recently added 2 team members to our team. And those 2 team members are the beginnings of a prop trading team. And they are exclusively focused on trading oil as well as NQ. And so it helps us because we have a small team, we have limited capacity, but it helps us to start to identify some of the finer nuances of the rules that we will then be able to publish and help you understand. Samir is asking, with Infinity, is 1,000 per contract margin requirement due to the increased volatility, or is it normal at Infinity? 1,000 is their normal. I don't know what they're requiring right this moment, Samir, but last week they were, because of the heightened volatility, they were requiring double that. All of their margins were double. So they were looking for $2,000 a margin last week, but their normal used to be 500, and now it is 1,000. That's the norm. Rex,
Rex is, ask,
yeah, go ahead, Aaron.
Rex is asking, is the last losing day from over a month ago based on filter trades or the system trades?
Well, it's one and the same, Rex. Filtered trades are, and using the criteria that we've been discussing in the live trading room, is part of the system. We've always said that you don't take every single signal that the system presents. And what we've been doing is kind of working our way through helping you understand when to filter and what a high risk trade is versus a what I consider a standard risk trade. So if we take a look at the daily summary, we go back to February 9th. That's the last losing day that we've had. We haven't had a losing day. We have not had a day since then until today that is lost. And we've not had anything really that came close to our maximum drawdown. So when you're saying, I'm pretty sure we had a few max loss days over the last week or two, that is absolutely not true. We track the system. The system consists of the signals, the PBA alignment with CXA on 5 minute, the PBA 5 or 3 minute aligned with the PBA 10 minute. That's one part of the system. The second part of the system is what we've defined as the parameters, which is the term we use for what should the profit target be versus what should the stop loss be. Those are the parameters. And the third part of the system, in trading the system, is taking a step back and learning to recognize what the market is projecting for you right now. And when we have these super tight patterns, you can see it actually right now on the 5 minute, because we're in live trading hours right now. When you have these super tight patterns, or you have these extreme movements that have pulled away from the moving averages, maybe even are touching or exceeding the outer Bollinger Bands, that is the last part of what we describe as the system. That last part is critical in understanding when it's appropriate to take a pass on trades because of them being high risk versus when this is a prime risk. So everything we track is based on trades that we would take. In the detail, we track every single trade, whether it's a high risk or not, and we code those with an X. They don't get added into our cumulative total because we're not actually trading those at the time, but we are tracking them. And the more data we gather, the more we can research that and understand if there are other aspects, modifications to the Aurora system that we want to make entirely into its entirety, or if there is a way for us to take advantage of some of those signals that we had previously dismissed and filtered out of our trading.
Steve is asking, will I need another broker for options with Infinity? How much a difference in fees with Infinity and TD? It would be much better to have everything on one platform. So Infinity is futures only. They don't have options. So we personally use Infinity for futures and then E-Trade for options. You can use whatever broker you want. I highly recommend you use a broker that has a platform that is easy to use, which is why we're with Infinity, has low margin requirements, which is why we're with Infinity, and also low commissions and fees. Again, why with Infinity. If those things aren't as important to you, you can use whatever broker you want. I would encourage you to contact our contact over in Infinity and just have a conversation with them and compare that to what it would look like to open up a futures account at TD Ameritrade and see what is best for you and your account.
So Doug is asking, how do you evaluate when trading a new symbol like gold or corn, what times to look at, alignments, indicators, etc.? That's really a great question. And I'll tell you the process I went through with oil. So on oil, actually, this is the same process I started with on NQ almost 2 years ago now. I start with a one lower time frame and one longer time frame. So on oil, I started with a 5-minute, 15-minute. I don't want to get into a much shorter time frame than 5 minute until I've really worked out what the dynamics of the trending patterns are and how often those occur and how often there are retracements that I could take advantage of with a shorter time frame. But I start with that combination. 515 is a good combination to start with for futures. On stocks, I found that it's a 530 when I'm looking for options. And then I just simply track. I will sometimes trade the market looking for the alignments between the 5 and the 15. And then I'm looking at the Aurora signals themselves, the PBA and the CXA, and identifying where the best alignments are, whether it's perhaps a 5-minute CXA with a 15-minute PBA, or a 5-minute PBA with a 15-minute CXA, or in this case, I've really kind of zeroed in on oil as a PBA alignment, and also a PBA alignment with the adaptive entry system bar color, which is embedded inside of Aurora. So when I start looking at another market, hold on one second. When I start looking at another market, I'll start with a 515. And after you have a little bit of experience with this and you understand how the signals work, it's not difficult and it doesn't take very long to see that, you know, this 515 combination isn't really working, or the 5-minute alignment with AES isn't really working. And so then I'll look at other things. I will tell you that the 10-minute chart, is a very influential chart in almost every market. And if you ever wanted just one single time frame to trade, I would most likely choose the 10-minute chart and ride the trends. But there are some big drawdowns on 10-minute charts, so it's a whole different set of dynamics. So I'd prefer to have some catch type trades where I can get in, grab, you know, some profit and get out. So the next step, Doug, is I know that my point of reference on NQ is I'm looking for $200 of profit on each catch trade. So I started with that basis on oil. And then I just kind of worked from there, you know, and I started to see the frequency of which we were hitting $200. None of this, by the way, is being done in live. This is all in sim as we're experimenting and testing. And some of it is back testing, going back and replaying and understanding where the signal is alerted. And I've got all of my alerts logged so I can see, you know, what came on 4 seconds late, 12 seconds late, or right at the open of the bar. But I started with a $200 profit target, and I evaluated a couple of months worth of trades to determine that that a 40 tick stop was a pretty reasonable stop. Now, just this week, we actually increased that to a 50 tick stop based on how much volatility we're seeing in the market. But that's kind of the evolution process of how I get there. And in my opinion, it really takes 2 to 3 months to understand a market. You don't have to be trading every single signal every single day. You can go back and you can do some research and apply that research to trading in sim for a period of time, and you'll start to get a sense for how the market moves. Oh, Doug, absolutely. Doug's saying artificial intelligence may be helpful in the future. We are deep in the process of building our cycle bot for futures. Maybe even down the road for options, but let's get futures working first. So we're hoping to accomplish that first level of CycleBot in the very near future. And then CycleBot just finds the signals. It just automatically sends the trades to the broker. And you as the trader have a responsibility to make sure CycleBot didn't go off on its own and take over the world. What was the name of that? What was the name of the computer? HAL in 2001: A Space Odyssey. You remember that, Aaron?
It came out in 2001.
No, the name of the movie was 2001: A Space Odyssey. You're a goof.
I'm actually concerned you're looking into making a me version of AI to create your spreadsheets for you. Oh boy. All right.
Yes. Yeah. Why? Do you think then I wouldn't need you?
Uh-huh.
I'll always need you. I'll find something else for you to take care of.
Raj is asking, what kind of option trades do you usually provide?
So when we started the alert service about 2.5 weeks ago, we launched it with the idea of providing alerts for buying to open calls and buying to open puts. Now, what's really interesting about the alert service is that trading the Aurora signals has actually been very prosperous to a point that we've sent out some alerts, and we are literally pushing the alert out in less than 60 seconds after the trade has been identified. And we're still getting the alert in the hands of people who are saying the price has already moved $3 or $4. That's the option price. And although we build a cushion into our profit target, that still has caused some concern amongst some folks thinking that they can't be successful with it. I think some of that is telling themselves a story because I'm going to give you an example, just an arbitrary example. If we know historically, and thanks to Aaron's tracking and historical database, we have tons of information. If we knew historically that an Amazon signal typically moves 18 points, the underlying stock, and if we're trading a 50 delta, that means we could expect roughly $9 of profit. When we alert an Amazon trade, we are stating that our profit target is $5. So what we've done is we've kind of worked in an expectation that there is some slippage between our fill and the fill of client once they receive the text and are then able to open the position. But that has still caused some concern for some folks saying, you know, I tried to get into it. I did it, you know, a few seconds after I received the alert and the price had already moved $3. The first 2 weeks that we launched the service, I took every trade off of the alert. I did not know what our team member, Mark, was identifying. I didn't know what he was alerting. I didn't know the price. I didn't know. I was just taking it strictly based on the alert. And I had slippage on my trades. And in some cases, I had less of a profit than what the service had taken, but I was still taking profits. So we are having some discussions about whether we want to alter the service just a little bit to make it a bit more profitable for everybody and easier to understand and easier to take advantage of. So when we decide that, we certainly will let you know. In the meantime, we are looking for trades that have alignment between a 5-minute and 30-minute. So here's a great example. We wouldn't have done this late in the day, but I'll just give, well, let me back up to one that we would have done. Here's one that came out at, let's back up here. Losing my chart here. There we go. Here, so here you've got a 30-minute signal at 9:30. You don't have confirmation until 9:35. So there's a 9:35 signal to take the trade. And you can see what happened after that to go long. You can see, first of all, it pulled against us, which would cause some people a little concern. But as long as the 30-minute PBA is still printing, we hold the trade. If we had not hit our profit target and the 30-minute stops printing at the open of a bar, not bin bar, then we take the trade off. So in this case, 935, the opportunity was to get in to the stock at 28.54. And if we're trading a 50 delta, then we would have held that trade until we had $5 of profit. So we needed to go up $10. It actually did that on the next bar. So we're out on the next bar. But let's just say that did not happen. We had a little bit of a drawdown first, but the 30-minute is still printing. So we would hold then until the 30-minute stopped printing, and that was at 29.38. So if we had held for the entirety of that, we're in at 28.54 to 29.38. You know, there's an 84-point move, and a 50 delta gives you $40 of profit. But we are using a close or a stopped print on the 30-minute to take the trade off. So one of the things that we're having some discussions about is maybe doing some spreads, some debit spreads. I'm not a big fan of credit spreads, but some debit spreads. So it's still directionally biased, and it would take advantage of the move, but it would be at a lower cost basis overall. And if you know how to construct debit spreads, they can be very profitable.
Steve's asking, what time are the alerts sent? They're generally sent anywhere between 9:35 Eastern time to 3 o'clock Eastern time. So really any time during the market. We try not to open a trade within the last hour of market or right at market open.
And one other thing is we typically, and we started the service off by saying we really didn't want to hold overnight, but there may be some situations that we need to change that. But before we make any changes just by sending out an alert, we would advise you probably have a informational, educational webinar to help you understand how to best take advantage of the service. It's going to be a great profitable opportunity. We're just kind of working out some of the aspects of it that will make it the best experience for you. And one other thing that I could not possibly really have predicted when we envisioned the service and we kicked it off a couple of weeks ago was the impact that volatility was going to have, or the heightened level of volatility. I mean, we've had some trades, you know, poor Mark identifies a trade, and even before he can get the trade set up, it's already moved so much that it's out of bounds for us to take, let alone sending out the alert. First of all, the good news about that is that's the power of the Aurora signals. The bad news about that is it's just heightened level of volatility that is preventing us from getting things out there. So I think what we will see going forward is probably a improved level of profit and performance. That said, I mean, just tracking from a perspective of the alert open and close, profits are $1,780 so far. We've had 19 trades, 11 wins, 8 losses. We're isolating those 8 losses, taking a look at what might be different on the patterns. I've identified a couple of things. I don't think we should have that many losses, but the alert service has produced 1780. That's a little behind the pace that we would like to provide, but it is positive in a very challenging market right now. Samir is saying, can you go over some of the options trades you took today? I'm not going to go through much of them, Samir, because there's a particular option spread strategy that's fairly advanced that unless you really understand options or advanced options, might not, it's not going to be easy for me to explain. But I will say that there was, let's go to SPX. On SPX, about 10:30 this morning, I recognized on the 30-minute chart that we were trading so far above the upper Bollinger Band. And I know just from experience in trading that the Bollinger Bands and the moving averages interact. When the price is pulled up to a 2 or 3 standard deviation from the moving averages, it is guaranteed that the price is going to move back and reacquaint itself with the moving averages. It's the only thing I ever say guaranteed about trading. It's just going to happen. So I just decided to go ahead and open a put on the S&P 500, and I put the expiration out a week. It was off a 30-minute chart. That ended up being a nice trade. But I could have gone through most every stock at that time that is in our watch list and done the same thing. I wasn't going to put them all on, but they were all showing pretty much the same thing. They all had tremendous opportunities to pull back. Now, we teach this strategy in our options trading course, but it is not a strategy that I want to send out in the way of an alert, because it's got a heightened level of risk if we continue to move higher, and then there's some management that's required, and that's not the principle of the service. Service right now is alignment between the 5-minute and the 30-minute, and looking for opportunities to buy to open a call and buy to open a put, and when and if that changes, we will certainly let you know. Samir, we don't have any intentions of providing that service based on the option alert service. Let me see if I understand what you're saying, Michael. Send 2 alerts. Today we had Netflix, alert the Netflix call. We'd know to buy a call at the money with Friday's expiration. And follow it with current alert. You lost me, Michael. I'm not quite sure.
I think
What?
I understand what he's saying.
Go ahead, Aaron. Thank you.
So we see a signal appearing. So I'm going to explain what he says, and I'm also talk about why that's still going to cause a delay for the alert. He's saying the signal appears, you send out an alert that says Netflix call, and then we go to work the order to fill, and then send out, okay, we filled the Netflix strike expiration at price, and this is your closing target. And he's saying, but just saying the Netflix call part, they would know to open something at the money. But the concern that we're trying to avoid is the delay in an alert. So by sending out that alert, we could not end up in the trade, as Mark was talking earlier. There are trades that the mark that is placing the options alerts are missing because everything, the Aurora system is too good. The signals are coming on, he's entering the trade, and the price just moves too quickly for him to get in. So that's what we're working on, is to avoid that type of more rapid movement. But I understand your suggestion is to give us a heads up, which we've talked about too, maybe that a potential long is setting up. So people can have a heads up, but these are all things that we're in discussion on, and how to get you the alerts as quickly as possible.
So the thing about the heads up, we've heard that suggestion before, is what would you like me to give you a heads up on? There was a point in time today where every stock on our watch list, we could have given you a heads up on, but you don't really know which one's going to follow through until you have the full alignment between the 30-minute and the 5-minute. And then it might be narrowed down to 3 or 4. And then we have to make a decision which of those has the best appearance of the pattern, which ones of those are not, pulled too far away from the moving averages. All the same types of things that we talk about on futures trading in the live trading room. So it's filtering it down. And once we've identified it, time is of the essence. And Mark's been doing a great job. Not me, Mark, but our team member, Mark, has been doing a great job of getting the trade identified, choosing the strike and expiration, and then getting the trade placed and getting the alert out. So it's not quite as easy as you are suggesting to just give us a heads up, because we've got a watch list of 9 different stocks, indexes, and ETFs. And seriously, at one point today, every one of them would have warranted a, hey, heads up, you could be getting an alert on this. And we're just not going to do that. Raj, I think I answered your other question. What kinds of strategies? You say you're comfortable with spreads, both kinds, credit and debit, in this environment. Do you worry about theta decay? No, I don't really worry about very much in particular, Raj, but no, I don't worry about theta decay. We are in and out of these trades typically within a couple hours at the most. There's no amount of theta decay or delta or time value. There's just nothing that you want to imply from the Greeks that would impact the way the trades are being presented. And if you would prefer not to take a trade, because I see your other comment that you think our choices are concerning because Amazon is so expensive, don't take the trade, or take it as a spread if you are comfortable with spreads. You're not obligated to take the trade exactly the way we present it, the way we alert it. We are basically in that alert telling you, we have identified this opportunity and we are taking the trade, and we're doing it based on the following. We are buying to open a March 18th 355 call, whatever it might be. We're telling you what we are doing. It is entirely up to you to decide if that is what you want to do. Is that best for your account? Do you want to not trade that because it's more expensive than what you're comfortable with, or you seem to be concerned about higher price stocks or indexes? And you did ask, what about some less expensive choices? Well, also on our list is Apple, which is a fairly inexpensive choice. We also have IWM, the Qs, and SPY, which are 3 ETFs, which are very affordable. And there's a couple of other stocks in there that certainly are less than Amazon. But we have such a wide range of individuals trading with different levels of capacity. So whatever we alert, it's entirely up to you to decide whether or not that's something that you want to participate in. JT, you're asking, after Amazon stock splits, what will be a comparable stock to trade? I'm not sure. Are you saying we should replace Amazon? I haven't decided to replace Amazon yet, and we've already got 9 different indexes, ETFs, and stocks. We've also selected the watch list based on our comfort level that open interest will accommodate alerting to a very large audience. You know, if we alert out to 1,500 clients, and there is a limited open interest capacity on what we're alerting, then that could present a problem. And we're not going to do that. So we also pay attention to open interest. And Aaron and Mark and I reviewed open interest in general on every one of these. We had some other stocks in our watch list that we really liked. They moved nicely, but the open interest really just doesn't accommodate an additional large number of traders.
And when Amazon does a stock split, we'll just reevaluate it, as we did when Tesla had a stock split a couple of years ago, and it ended up not really affecting the profit targets that we were looking at on Tesla's. I mean, it's still one of the ones that we trade. Tesla still moves and cruises, and the stock splits didn't seem to affect our profit targets. And that was done a couple of years ago. We'll see. Amazon might be different, but it's always something we can evaluate at that point.
Steve's got two comments. One is high volatility equals higher premiums if you're right about the direction of the underlying. Absolutely. And that's where Aurora comes in, Steve. And I'm very comfortable with Aurora, particularly on the option trades, a 30-minute chart. We basically are trading a 30-minute chart. I don't want to trade off of a 30-minute signal if I have a conflict or an opposite signal on the 5-minute. Because the 5-minute is going to provide for me the most immediate bias to the movement. That's why I'm looking for confirmation on the 5. But if I have no conflict, I'll just take the 30-minute signal, because the 30-minute signals on Aurora are very strong. I could go through stock after stock here. Shopify has kind of become one of my favorite go-tos. Here's 10 o'clock this morning. Here's a PBA signal to go long. And you can see what happened as we moved higher there. Actually, it stopped printing right here. So you had a small profit there. Started reprinting here. You've got a nice profit there. And then you got one little bar here. Not much there, maybe a little bit of a loss. But by then, I'm probably done. I'm not looking to trade every single signal. This is not like futures trading where I'm taking more signals rapid fire. This is planting a seed that is called an option with a future expiration date that might be 2 days to 2 weeks out, and be patient and let the signal perform. That's what we're looking for right there. And Steve also said, want to let you guys know, I learned the seed iron condor from your YouTube video. Makes me profit a lot. Well, that is awesome to know right there. Good job, Steve. I love the seed iron condor. Samir is asking if one's to take the options trade based on the charts using the Aurora system, could the delay in entering be eliminated? Well, if you're talking about the delay of the alert service, absolutely, because you would see the signal when it presents itself and you would be able to immediately enter the trade. You essentially would be like Mark. You're entering the trade, and what you are eliminating by having your own chart subscription is you're eliminating the wait for that alert to hit your phone, which is still in under 60 seconds. But in that 60 seconds, we're finding that the price movement can be a couple, $3. Well, Raj, it's not that I don't like credit spreads. They are the least productive spread available. It's a fixed spread. You have a pretty limited amount that you can make. You have limited risk to it also. It can be productive, but I would prefer a debit spread because I'm trading directional bias. Directional bias on a debit spread, I can widen the spread. I can leverage the short leg. I can trade a diagonal spread or a calendar spread and have a short-term expiration for the short leg and a longer-term expiration for the long leg. And I get very rapid time value decay, which is working in conjunction with the positive movement on the long leg. You don't have all of that flexibility on credit spreads. So it's my least favorite. It is the simplest of the spreads. And most people who start trading spreads will start with credit spreads, which I think is a great place to start, but it is the least profit productive spread. I put on a spread today on, what I put it on? I put it on the S&P 500 today, and I had an $11.50 spread where I had a 30-point difference between the long leg and the short leg. And I closed it out today for a $1,700 profit. You're just not going to get that same level of activity on a credit spread unless you're trading a larger volume of contracts. Well, calendar spreads are outstanding. If you know how to trade them, you can actually pair them. You can pair a put calendar spread with a call calendar spread. It doesn't really matter, Raj, what happens with the long legs. All you're really doing is trading it for the leverage of the short legs. So I had one on that I put on yesterday that had an expiration of next Friday, a week from this Friday for the long legs, and this Friday for the short legs. And the cost basis of the spread was $50, and the short legs combined time value for this Friday was $52. So it means that essentially if I held and the price stayed inside the zone, the range, the sweet spot between the long, between the call strikes and the put strikes, that I could benefit from the full time value decay of the short legs, and I would have minimum time value decay on the long legs. So when I open spreads like that, it's called a market tamer. But when I open spreads like that, it's a four-legged spread, I don't really care what happens to the long legs. They offset each other. Puts and calls, they offset each other if you construct them properly. And I'm really holding for the leveraged time value decay on the short legs.
I was just asking if you are day trading, isn't the pattern day trade rule a concern? So it's definitely something you want to speak to your specific broker about. Pattern day trades are applicable to margin accounts. Cash accounts are under a different rule, at least according to our broker. Cash accounts, the day trades are not tracked.
Yeah, you just have to wait for the funds to settle. So if you have a minimum amount in your account to take one single trade, you won't be able to take another trade until those funds have settled. If you have, say a $10,000 account, you have enough in your account to take 2 or 3 trades, and you're taking them one at a time, then you have enough funds to take another trade and wait the day or two for the funds on the original trade to settle. But it's a cash account. It's not a margin account. And so the day trade rules are different, but you should talk to your broker about that. Raj, we don't have a YouTube video on the Market Tamer. It is part of our Profit Builder Plus options education program. Fergal's asking, how's the performance of the new option system been doing? I shared that just a minute ago here. Not as strongly as I would like, my own personal expectations, but we have a couple of things that Aaron and Mark and I are looking at to just improve it. But first 2.5 weeks we're up $1,780. That's the service. So I look at it this way: even if you had some slippage, you took all the trades, you had the same losses we've had on the losing trades. If you had half of that, okay, it's not outstanding, not by my definition, but maybe you have $850 of profit. Well, that's through 2.5 weeks, and we've got some improvements that we're going to make to it. But it's a service that's only costing you $97 for the first 30 days, so doesn't take much to cover that and put you net positive. Steve C is offering a suggestion, based on the delay of receiving the text on the alert service. You might want to consider compensating by adding more contracts to help with the loss of the movement in the base. But that brings in a whole different dynamic, Steve, in terms of the risk. If the trade goes south, we've got limited exposure based on the number of contracts that we're alerting, and somebody who, say, takes 2 contracts, or in the case of a trade where we might be suggest an ETF, or we might be suggesting 5 contracts, suggesting somebody to take 10 contracts, just changes the risk profile of the trade. It's not something that I would want to recommend. Folks, I don't see any other comments or questions out here. Yes, Mike, we are aware of that. Thank you for that comment. We're aware of that. Everybody needs to talk to their broker and determine the status of their account and have a discussion with their broker about what types of trading you plan on doing, and do you have the account that will accommodate you? Or do you have an account that's going to put you at risk of being identified as a pattern day trader? Rod, if you're talking about infinity futures, our preference, everybody on our team, is to use the downloaded version of the DOM. The web version of the DOM is not, I don't think it's as good as the downloaded version. Nobody on my team uses the web version. All right, folks, I think we're going to go ahead and close out here. I'll just leave these thoughts with you. We are in a challenging time right now in the world, and where that hits close to home for us as traders is the market dynamics are different than they were a month or 2 months ago. I am very, very pleased to hear from traders how well they are doing, to see what the performance is in the live trading room of trading NASDAQ, of trading oil, following the Aurora system. There's probably not a better stress test for the Aurora system than what we're going through right now. And for us to have our first losing day, trading from 7 to 2, reporting the NASDAQ 100 futures trading 7 to 2, to have our first losing day since February 9th, I think speaks volumes about the system and the opportunity that you have available to you. We're providing these tools, we're providing the education. If there's anything we can do to help you get to your goal, tell us. If it's something within reason and we can accommodate that, we'd be happy to help you, especially in providing some guidance in the live trading room. We want you to hit your goal. We want to hit our goal. And I plan on hitting my goal. I'm diversifying. I share this in the room, in the live trading room every day. I'm trading NASDAQ. I have a team member who's trading NASDAQ for me. I'm personally trading oil. I have a team member who's trading oil for me also. And I'm trading options. And I have a team member who's trading options. So you don't have to have people who are working for you trading. You have to think about where the best opportunity is to source your profits for today. Start with NASDAQ futures as your core if you're trading futures. Look to oil as one of your opportunities when NASDAQ is stalled or just not being cooperative. And think about options if you are an options trader. You don't have to do a bunch of options trades. You don't have to go in and trade them like you're trading futures. You could have one well-placed options trade based on a 30-minute chart every day and add a few $100s of profit to your bank. So that's what we are here to provide for you. So we'll be back tomorrow morning at 8 o'clock in the live trading room, and we'll look forward to hopefully a very productive trading day tomorrow. So thank you all for being here. Thanks for being part of our community. Really appreciate that. Aaron, thank you for helping out tonight. We'll talk to everybody in the morning.